Alright traders, I am back again with another video, and in this video we're going to be looking at a few of the cryptocurrency pairs. We're going to look at quite a bit of them. So we'll just go through some of these charts, see what we see, and we'll be using the Ichimoku system. So I'll show you some of the trade setups that I use and that we use for trading anything that you can chart. We can use Ichimoku for. So trading with the cryptocurrencies is going to be something that if you want to learn it, you understand where these levels and what the market honors. So I'm going to go through that. But basically, guys, yesterday there was probably no one prepared for what took place, because we saw a 30% drop in less than 24 hours with a lot of these cryptocurrency pairs. So for that to happen, I'm sure no one was really prepared for that, and a lot of people who believe this is just a bubble about to burst probably felt that that was the start of it, and probably, you know, the sentiment has probably changed some, but we'll see. So we'll look at the charts and see what we can tell. But basically, guys, we're looking at the Bitcoin US dollar. So looking at this, I'm looking at the daily time frame. You could see I'm using the default settings for the Ichimoku system, and some of these levels, guys, just keep getting honored and honored. So if you look at the market, it tends to follow this Tinkinson level. So we like to get bounces off of the Tinkinson level. So two types of trades that will help you to get into the market for a trading opportunity with any asset, because you'll see that these assets like to follow the Tinkinson level. The Tinkinson level is this green line here, and you could get trades off of that level. So what happens is you get a bounce on that level, and then you could get into the market. So we'll have a bounce, and then we look. So what we do, we say level, signal, and trigger. You need those three things to trade the market. So with the level is the Tinkinson or the Kijinson. We'll use both in this time. So we have different types of trades that we talk about, and I'm going to just be talking about pretty much the Tinkinson bounce and the Kijinson bounce today. All right, but you could see if you're looking at the market trending, it really follows Tinkinson very well, because it's the short term. It's your short-term indication of the market, the short-term bias. So as long as the market stays above that level, your short-term bias is bullish. But once it goes below that level, your short-term bias is bearish. And then you come to the Kijinson level, which is here. This is a market equilibrium. The market doesn't want to get too far away from your Kijinson level, because it's the equilibrium level, and the market pulls back to that level, and it's also your medium-term bias. So as long as the market stays above that level, then your bias is bullish for the medium term. If it goes below and closes below, then it becomes a bearish sentiment. Then you got your cloud level, which is your last level. It's going to be the long term. So you have your midterm, you have your short term, your midterm, and then your long term. Your long term is your Kumo cloud. So the top of the cloud and the bottom of the cloud, once the market goes through there, that's bearish sentiment. As it stays above, that's long-term bullish sentiment. So looking at this chart right now, we still have medium term, midterm bullish bias with this asset. All right. So when we looked at this, I posted one of my videos talking about trading this Bitcoin. So we made an entry here off of this rejection, because we were trading the Tinkinson level here. And then the market showed indecision, then broke higher. We would enter there, and then we made a little bit of profit, and then the market dropped. When we're trading these levels, because we're basically trading a lot of pullbacks when you're talking about trading off of Tinkinson or Kijinson level. So if you're trading pullbacks, then you're getting back in with the trend. You still have to make sure you can break and close above that highest level before you look for any other target. So your first target should really be that high that you see, that previous high, because you want to get past that. And you could see the market didn't get past that level. And so we didn't have a lot to go on past history, because this is the highest it's ever been. So you didn't have much to go on based on support and resistance. So when we did this, we basically could look at, now take this level, and then we could look at it. Now one thing that we wanted to do is change this to red. I like to make my support and resistance levels red. So we'll make that red. And then you can see the market came right up to that level. We should also been aware and be aware that there is divergence, was bearish divergence when the market hit this level. Because if you go back and you look at both levels, so you have this level here, and then the market came up to this point. When it was up to that point, you could see they're even levels. Well, that point pretty much was here, and then you had this point here, which was a little lower. All right. coming straight down to here, and then straight down to where this ultimate oscillator is here. But look back at this here. This is also a signal for you to understand that we started to have divergence here, and you could see there. So when we went from here to here, which is from here to here, this was going to the upside, this was going to the downside. We started to have divergence. We should have been looking at that and expecting some kind of a pullback eventually. Now if we had support and resistance levels, we could have expected it at a level, but here we didn't really have anything to go by, because like I said, no past history at this level. And then you could see the market going. So with this divergence, maybe this fall was expected, but not this big gap here, this 30% drop basically. All right. So when we look at this now, you could see the market honoring this Kijinsen level. This is the level of equilibrium. The market has bounced on it once. Okay, let me go back to this. So here the market came down and pierced it exactly, but then here the market couldn't close below it. When we see this big candle, even though we had what the market did yesterday with this big drop here, this is a big rejection, because even though it dropped this to this point, there still was a lot of buyers coming in here still buying this thing and still believing in this thing. So it pushed it back up to the upside here. So now we're looking at this thing holding at Kijinsen level for maybe a Kijinsen bounce. You still have a TK crossover that's bullish, which is your Tenkan-sen Kijinsen line, because if you look at that, here's your Tenkan-sen and there's your Kijinsen. They were together here and then crossed up above. As long as your Tenkan-sen is above your Kijinsen, that's also a bullish signal. So they stayed above here. Everything's still bullish, even though we had that big drop in the market. And then you could see we're still flat here. All right, the market honored this level pretty much, and then now we're trying to see a move here. So basically from this point up, there's been buyers coming into this market still. But be aware, if we do look at anything, we could be ranging in a ranging market, because now we kind of starting to develop a level. All right, so if we look at that level, you could see this level of support right here, and then see this level where the market's sitting. So if I took Ichimoku off the chart, you would see we're now in a range, which is a little dangerous, because now if we even move up to this point again, we can probably see the market move to this point, but will it fall again? So we'll want to look and see if there's divergence. Maybe that divergence may help us. But basically when I see the market get to a level, I just look at the price action, look to see what the market's doing with price action, and then kind of make up your mind. But here you can see we're at the bottom of the range. So now this really hit the second level of the range. We didn't close outside of the range. We closed right at the support and resistance level. All right, so now we're expecting things to hold, because we got a lot of confluence here with levels, with your range level, basically your past support level. We can use this past resistance level. So now using that past support level, you see the market came down, pierced it once and closed on it, and then didn't go lower than that. Basically didn't close lower than that. It did go lower, but it didn't close lower, and then it got rejected all the way back up to that level. So now you're bouncing on Kijinsen, you're bouncing on this support level. We should see if the market's going to move to the upside based off of the price action. So when we trade, again, I told you we trade with level, signal, and trigger. So if we don't have all three things, we won't make the trade. All right, so here we're looking at three things that we're looking at. We're looking at the level. We have a signal, which is this big indecision candle, this big rejection candle. This one's not an indecision, the big rejection candle. And then we have a trigger developing. We don't have the trigger yet, but we always trade with LST. So our trigger would be a close above this level. Now a lot of times with a rejection like this, I'm not going to wait for the close. All right, so what I'm going to do is, as soon as the market hits this level right there, I'm going to enter the market. All right, because I'm paying attention to the buyers coming into the market and seeing strength back to the buying area again. And then so if the market could reach this level again, that's where I want to take my entry. So basically you should be entering this already. But if you're going to, this is a little bit of an aggressive style, but if you're going to be less aggressive, what you wait for is for it to close. And if it closes above this level, then you enter the market at the close above. Now quite naturally, you want to have your stop loss. The real true place is to have it way down here, which is really far. If you're a long-term investor, and depending how much you got capital wise, you can manage that. But the one thing you really want to have is see this support and resistance level, at least be a little bit below that level. because we know that the market could come all the way back down. It's already came down to this level, so it could come back down and spike you out. Now, maybe you don't give the market too much room to take you out of here, so that's why you keep your stop loss tied up against the support level here. We want to see the market move higher. We don't really want to see it fooling around here, all right, and then dropping and then fooling around and then maybe coming up. Okay, so we want to catch the move when the strength comes in, and it looks like there was a lot of strength coming in right here, because buyers came into the market and forced this thing all the way back up, even though you could see all the sellers all this time. And then boom, the buyers came back into the market. All right, so this sold off for 1, 2, 3, 4, 5, 6, and the 6th day was a monster sell-off. Started a little bit here, indecision, then a little more selling, more, and it developed even more. But you could see there was still some buying pressure in here, but then the bears still overtook that, and then it dropped it like crazy. But buyers came in throughout here and pushed it all the way back up. This is a good entry level right there to trade this thing all the way up, at least to this level maybe. All right, now I'm not gonna tell you that it's gonna get there, okay? So let's move. So that's what we're looking at here. A lot of times I go down to the 4-hour time frame and try to enter the market. All right, and you could see you had a nice rejection here on the 4-hour. You had another one here. You could have used this level. You could have closed above and took your entry here. There's all different types of entries. And then one of our real good trade setups is going to be a fractal breakout. So usually I'll trade the daily time frame and then come down to the 4-hour time frame to look for the fractal breakout, because the fractals pretty much tell me the direction of the market. As long as we have bear fractals being violated, I like to look at staying short. And when we violate a bull fractal, then I like to look at going to the upside with my trades. And that's a big signal for me, and that comes before Ichimoku, because Ichimoku is not going to react as fast as the market. All right, so that's what I look at first. All right, so I do see an opportunity here on the 4-hour, because I just showed you a couple of chances, and there's still more chances to get in the market. So there's areas where you could still get in here. And you could trade strictly on Ichimoku concept and wait for all the things to turn over, which by then the market will be much higher before you could enter the market. Here we're basically looking at this market being in a range. All right, so I fixed my 4-hour levels, because you got to adjust your levels. So you see the bottom of the 4-hour level right here, which is here, which means you have the range. You could see basically we're hitting that range, and it's a nice range trading area. Boom. Come up to this level, back down to here. So we expect the market to come back up to this level, all right, based off of being in this sideways range right now. And you started the range at this point here, all right. So that's what we're looking at Bitcoin US dollar. Let's get off of this and look at something else. All right. So we'll look at the Litecoin US dollar. So you're going to see the same thing with a lot of these markets right now, because you had that big drop on mostly all of these markets. All right. And with this Litecoin, basically, again, you could see we had divergence. This divergence kicked in a long time ago. All right. I have levels drawn out. I'm going to talk about those levels. But let's look at this divergence here first. First, look at this high right here. That's this one right here. And then you see this level right here. That's this right here. Then you have this right here. That's here. And then where we are now. From this point, there was monster divergence coming in here. Bearish divergence, which was strong. But the market kept going on. So we kind of should have expected something to happen. And when you expect it is basically when you see we can't violate this top. We didn't have anything, again, in the past to judge it go by. So we couldn't use anything to go by. And then you look at this market, we're trading inside of one candle for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and now 11 days inside this one candle. So you know we haven't done much. I mean, yeah, that's a pretty good ranging area. And this is also going to be a typical range. Okay, so I'm going to show you it's not the bottom of this candle here for the range. All right, but when we look at this, what's the levels that this thing is honoring? I'm still using the default settings for Ichimoku. I don't care what settings you use here. This market is flat, so it doesn't matter. Kijinsen's flat, Tenkan-sen's flat. They're pretty all going to be the same. But when this thing is trending to the upside or to the downside, you like to find bounces off of mostly your Tenkan-sen level. This is where you want to bounce off your green level. But sometime you'll get bounces off your Kijinsen level. But most of the time when the market's in a strong trend to the upside, you're getting bounces off of your Tenkan-sen level. All right, and that's the one you're going to want to follow. Now, if it comes down to your Kijinsen level, then you could look for a bounce. So basically, you should be looking for a trade at your Tenkan-sen and your Kijinsen level just to start off everything in a trend. Now here you can't do it because it's flat. It doesn't matter. There's so many crossovers. Ichimoku's not helping you at all there. This is a ranging market. And then the market takes off a little. You look like you may get a bounce there and it gives you some profit, but then the market gets flat again. You lose pretty much what you had if you didn't take the profit. And you probably want to realize that the market was going to come all the way back down. You were going to be flat. And then the market took off again, then flattened out big time. And then here you had the real good move with the market where it took off. Now we're back to this again. All right, so we're honoring. We didn't close below your Tenkan-sen level, which is your short-term momentum, but we did drop way below it, and we didn't close below your midterm level either. And to say we're honoring this Tenkan-sen, I really wouldn't say that much because you don't want a flat Tenkan-sen, which this is right now. I don't mind a flat Kijinsen because I know the market's ranging when I see a flat Kijinsen. Remember that. It's pretty much ranging when you see a flat Kijinsen. All right, you could see the flat Kijinsen here. The market's ranging and then it takes off. You could see the flat Kijinsen here. This market is ranging. So the range levels are basically, I'm going to draw the top level here. Then let's go to the bodies. So we'll put this at the bottom of this body and then we'll go to this top here. So on the daily time frame, you could see that range we're in. Basically, you could call that consolidation because it's not that big. And then if I went to the 4-hour time frame, I have to adjust my levels a little bit to adjust to that. But you could see a 4-hour range. Pretty much, let's put it at the bottom here. So you could see we're in a 4-hour range. So you hit the top, bottom, top, bottom. We expect to get back to the top. Now let's go back to the daily because I like to make all my decisions based off of what the daily chart is telling me. There's still some divergence in here, and the thing about it, it's going to look like it's going to stay weak based on divergence. Let me mark this. So really you had this level here back here and we call that there. Then we had this level here, call this here. And then we had this level here. And then where we are now, you had that bearish divergence. We should have expected the market to drop a little bit because we couldn't get past that top. But there now, the thing that I'm seeing is different. Okay, so see this level right here? That's this level right here. And where the market is now is not higher than that level. And where we are now is a little bit higher. If that continues to go higher, then we just have a little bit of hidden bearish divergence, which could mean the market drops to the downside. So we may see it move up to this point and then we see the drop to the downside if it doesn't violate this level. It needs to violate that level if this violates also, or else we have divergence and we see the market drop to the downside. Now off of this immediate move, I would kind of expect the market to still get to this level because we still have the trading opportunity, much like we said on the previous previous asset, right at that level, because the big rejection. I always want to trade that rejection level. Now sometime the market's going to fail to it'll pierce through there, but fail to ever close above that level. It might hit right on that level. And then eventually the market drops to the downside. I can't tell you anything that's 100% positive or 100% guaranteed, but I can tell you things to look out for and try to get you into a higher probability trade. All right. And these things that we're talking about give you higher probability trade setups. All right. Instead of just risking yourself, risking your money and risking an opportunity. All right. But now you can see these two levels are the exact same at this point. And the market loves to do that sometime, pierce through and then come back and close at that level. Now we still have a while for this to close, so let's see where it is. But I usually would take my entry there, as I said, and then trade it up to this point. At least we just have to get past this for real. But we made a high here that couldn't get past. All right, so those are things you're looking at right now. You're bouncing on a flat Kijun-sen pretty much. Price honors this Kijun-sen and Tenkan-sen level. And let's go to the 4-hour time frame real quick. 4-hour time frame, you already had same thing, rejections, and then you had an entry level here. This is where we should have been looking to get into the market, looking at that range level and then getting into the market, moving higher. All right. But other than that, that's all we got there. Let's move off of this pair. Look at the Ethereum US dollar. Let's go to the daily. These things are all going to look pretty much the same. Again, I told you the market likes to follow the Tenkan-sen level. Sometime you hit the Kijun-sen when the trend gets a little weak, and here you say it got a little weak because we were sideways. Here it wasn't weak at all. It was moving to the upside, and it always stayed above Tenkan-sen. But then it got weak, flattened out, and it honored the Kijun-sen level, bounced off of it once, and then you had a TK zone trade opportunity where the market violated, and you had a bullish engulfing right here with your bounce off of your Kijun-sen level. And you had a couple opportunities here. You had a bounce here, but you probably wanted to honor your Tenkan-sen still. Then you had right here, you had a morning star. And there are people who tell me, oh, you're looking at the back history. Yeah, we're looking at the back history, but we do this real time too. I do the exact same thing on the trade setups that I post out. I have to show you when it's really happening. But we're going back so you can look at these same things when you see those things in the future. Those are the things you're going to want to look for. I'm not telling you, yeah, here's a trade here that, oh, you should have taken this trade. No, I'm telling you, look for this stuff in the future. This is what you see in the past. Look for it in the future. So the same thing, you had a continuous continuous divergence, which would be hidden bullish or bearish divergence, which is continuous. There's two types on this chart. So when you're looking to trade Tenkan-sen, Kijun-sen bounce, look at your divergence also. All right, because look at this low right here, and then look at this low, and then look at this area here. Here we had a bullish engulfing. That's one of our, we talk about level, signal, and trigger. You had a signal and a trigger here because you had a bullish engulfing. A bearish engulfing would be the same. Here you had indecision, but here you had a signal because you had level, signal with this morning star pattern, and then trigger when it closed with the morning star. And then you had another opportunity with a bullish engulfing right here. So you have to look at the market and see these things, see these bounces. And I don't really look for a trade until I'm at these levels. So all this other times I'm not really looking at it unless we hit the level. So here we hit the level, here we hit the level, here we hit the level, and we had a TK zone trade here. But anyway, this and that, you have this right here and this right here. These are lower. These are higher. This means continuous bullish divergence, which means you should be looking and thinking about a move to the upside. So we already set our level, and we already said that we want to trade based off of the level, and then we have our level, signal and trigger, and then now we also have continuation divergence, which is hidden bullish divergence, which would signify that this is still going to move to the upside off of the bounce of this level. So you had things to tell you, and I don't consider this, I don't trade the divergence per se. What I do is just look at it as something that's going to enhance my probability. So it enhances the probabilities for this trade along with all the other things that we talk about. All right, so now where we are now is the thing I don't like about this one right now. I mean, yes, we're honoring the levels still, pretty much honoring those levels, but I just don't like how big we got a big body here, and we're not clearly flat on this level here. So I still would look for a close above this level, and this is why I boxed this in here, because I just wanted to see a close above this level. And pretty much you could box the bodies in because that's where they are. And if the market closes below the body, then look to see if it's going to settle out at this Kijun-sen level. All right, because see, we're not closing below Tenkan-sen, and that as long as it does that, maybe Tenkan-sen starts to aim to the upside, and maybe the market moves to the upside. If we get a close outside of the box, we'll take the trade to the upside. All right, because we still want to trade to the upside based off of the rejection here, which is showing us that there's a lot of buyers still came into this market here. All right, now there's slight divergence here, bearish divergence to the upside. So eventually we're going to find a top here, and the market's going to fall again. Maybe this was the fall to end this divergence that we saw in the market here. And that divergence started right here again. This is bearish divergence. Bearish divergence, regular bearish divergence is considered a reversal. So when we look back here, and then the market dropped way down here, so is that going to be the end of the divergence? And then the market continues to move. All right. So that's what we're looking at there. That's the area I would look to get into a trade if I was going to trade. Let's go to the 4 hour. 4 hour again, same thing. Looks just like all the other assets because you had that big drop, then you had these rejections. It stayed above the cloud on the 4 hour time frame as far as closing. It never closed below. And you're looking at a Kumo breakout to the upside, but you don't have everything turned over for a true Kumo breakout because you want to see Chico span get above price, and you want to see your future cloud to become bullish. So you want to get that twist to be bullish. And then once price closes above, and you have that. So when price closes above, you won't have a true Kumo breakout here, because your Chico span is going to be below, which still represents you haven't trended higher the past 26 periods based on the 4 hour. If we go back to the daily, then based on the daily, you are trending higher. All right. So when you close above, you still have everything bullish based on the daily with the Ichimoku system. All right. So let's look at, let's go to another asset, Monero Dollar. Same thing, pretty much the same thing, but look how well this thing follows Tinkinson. I tell you how many trades you could get in here. You could get a good trade here when you get the crossover here. And this is a bounce off of the cloud, off of Tinkinson, off of Kijinsen. Then you get a nice bounce there. You get a good bounce here. You came close to Kijinsen. You have a little bounce here, but you have a better bounce. This is one of the better looking trades because this is a rejection at Tinkinson and an engulfing candle. So you could have set the level, or you could have taken the level here because it was a bullish engulfing. And it stays above Tinkinson throughout as long as the market's strong. Now, do we have divergence again? As you could see, this is kind of going to the downside or even flat if you want to say these are to the same levels, which would be this point and this point. These are going higher. This is not going higher. So when you see that, you should be cautious of that because, and that could take a long time to kick in because look how long it took. Way back here, it started on 11/20/17, right? Then the market moved, and then 12/21/17. So almost a good month before that divergence really kicked in. And then the market seemed to drop. We don't know, is that going to be the end of the divergence? And then the market gets back into alignment. It's hard to trade some of this stuff with such a big move as yesterday because the market sentiment has changed a little bit based on traders. So you want to see what the true sentiment is, and sometimes it doesn't happen right away. You can't tell that very next day with such a monster drop like this. So you have to just go by what you see, what the market's showing you on the chart, because that's all you have to go by. All right. So same setup, but I would be looking at getting above this level on the daily, which is big, and definitely have my stop loss below Kijinsen. All right, I don't have to put it way down here. I mean, you want to, if you're going to enter up here, you want to make sure you're below Kijinsen, but that's such a big opportunity. So we look at the 4 hour time frame. So 4 hour time frame, we're honoring the cloud here. We bounced on the cloud level, and then we boxed this in right here. We boxed the body in right here. That's why we have this box here. And then we look to trade once we close above. Closed above. You should be in a trade with a stop loss down below the box, and then look for the market to continue to the upside. All right, it's not showing divergence on the 4 hour time frame because this is going to the downside, this is going to the downside. Here it started to show divergence right there from here, but then the market dropped to the downside, so that's eliminated. And let's see. And that's all I see there. Basically, that's the only opportunity to get into the market for me. Nice inverted hammer here, close. So even though we still just would use our level right here, and this is the level where you wanted to get into the market where this green candle closed because we boxed it in. And Chico span is still within this price realm, but a little break above, market goes a little above. We have some bullish signals here on the 4 hour time frame. Everything's turning bullish. Back to the daily, and you could see what happens here, but that looks good, like a nice continuation move to the upside. But still, the sentiment, we'll see what the market really tells us with this price action here with these candles. Let's go to another asset. OMG is something that I've been looking at myself for a good while, and it happened. Everything that I'm thinking did happen. All right, I really wanted this thing as it was moving here. I was thinking like these past 2 days here, I really wanted to get in this trade, but how did I tell you I trade level, signal, and trigger. I didn't have level, signal, or trigger at that point, so I couldn't get in. But I know just based off of all markets, you could tell that the market eventually is going to have to pull back, and that's when you get into your opportunity. So looking here, we did have some divergence because I saw this because we were here and the market was up here. So we had some bearish divergence, which signified maybe a reversal. We didn't have any past levels to go by though. You see, because this is the previous high. So if this was a double top of some kind, it would be a lot easier to say, oh, that divergence might kick in, and that's where we could look at the market dropping. Well, I still wanted to get this trade to the upside. We're inside the TK zone right now, the Tenkan-sen and Kijun-sen. What did the market do? Okay, let's remove this. The market came down and honored the Kijun-sen level. It never closed below, and it looked like it's bouncing on that Kijun-sen level. So currently, I could still wait on the daily time frame because we're in the TK zone. We're flat, which means a ranging market. We may range back up to the top here. This may be the bottom of the range. We're not sure yet, but we're honoring this level at this point. So until when this candle closes, if it closes still above this Kijun-sen, then we're honoring that level. That's where we see the market honoring, and we're not closing below that point. Now to get in a trade, I have to either, there's two types of opportunities I could get in. I could wait for a TK zone trade breakout, which the market's between the zones, so you're inside the zone here. Once it closes above, then we go with the trade to the upside. Just because it closes below doesn't mean we take the trade to the downside, because there's some other factors with the trade to the downside. All right, because we have levels that the market could go to the downside. So if you did take the trade, then be aware of the levels that the market may go to. But with this, now we can mark this level maybe and see if it's going to be a resistance level, and then we could have something to shoot for. Let's go to the 4-hour time frame, because the daily is hard to get into with the distance right there. We want to get in with a better opportunity. So there is a better opportunity. There was, and now you need to wait here. Kind of wait for the breakout here, because with the breakout here, we'll be trading what we call first fractal out. So trading that first fractal out will be a much safer trade. So you don't have to enter this market yet. You could wait a little bit. And when you get a first fractal out or a fractal break or anything else, you're not looking at all the Ichimoku signals, because the Ichimoku doesn't move as fast as the market. So we don't base everything on that. But overall bias, if we look at the overall bias, his daily is bullish. So that's what we're concerned with. That's it. So when we go to the 4-hour time frame, when we make our analysis, we don't even have to have Ichimoku on here, because we already made our analysis based off of the daily time frame. So if we're going to make our analysis, all we're doing going to the 4-hour to look for entry, better entry, a better entry with less risk. So when you go to the 4-hour, you don't change your bias and say, well, the 4-hour is bearish, I'm going to trade to the downside. You made your analysis based on the daily, and you know your levels. You know if the daily is in a correction per se. All right, so if our mentality all the time was, when the market was up here, we were waiting for it to come down to Kijun-sen. It did come down to Kijun-sen. Now the thing is, when it dropped way below Kijun-sen, we could have put an entry level up here and waited for the entry to pull up, but we didn't catch that and didn't take that. And then the market moved higher, and then now we expected to move here. So basically we see, let's draw this out. So basically we see our one level, we see our 2 level, we see our 3 level, and we're waiting for our 4 level, which could bring us up here. So you have 1, 2, I'm going 3 down here, and then we go 4 somewhere up here. So I would use my Ichimoku observation theory to figure out those targets, where the market's going to see where that's going to be. But you always have to get past 2. And a lot of traders trade a 1, 2, 3 breakout by trading the 2 level. But to me, I think that's not a real good level to trade, because that's your range level. That's kind of like your, if you can't get past that level, you're just going to range and drop to the downside. All right, because that's the fluctuation level for Ichimoku. All right. And I don't want to be trading the fluctuation level. If I do, I want to be trading it on to the downside based off of resistance. So I don't want to trade at that level. I want to already be in the market moving up to that level. All right, so some traders trade the 1, 2, 3 breakout. All right, let's move on. This I do love this thing. This is the one that I'm really looking at trying to get into and trade an opportunity with this. So I'll wait for the breakout that I'm telling you to trade this. If it doesn't go my way yet, I'm not in the market yet. But I think this has a good opportunity. Not a lot of risk, $14 down here. And that would be a very nice opportunity. All right, so let's move on. Look at a couple other ones, get you guys out of here. I don't want to really just discuss stuff if there's nothing really to talk about, right? And here's Etherium Classic. We're looking at the market pulling back to this support and resistance level here, basically. You had this level that you could look at. Now we broke and violated the Kijinsen level and closed below it. So our bias had changed, and now the market trying to close above it. This is a market I really can't tell what's going to happen. It may drop back down to this level and be a range, and then we'll have our top. So it's kind of hard to look at that, even with Ichimoku on the lower time frame. And I don't have my fractals, but there's levels I could look to trade, but we're not at any levels yet to really make a solid judgment on what the market may do. I like to be at a level before I could really determine. But again, look how this thing follows these levels. Look how it was dropping to the downside here, and it followed your Tinkinson level. You could be trading all these downside moves. Then it followed your Kijinsen level for a Kijinsen bounce to the downside. Then you had a breakout. Market moved higher. Kumo breakout. I don't know if you had all your signals for a Kumo breakout when this happened. And then finally the market gave you another opportunity. But where did it honor? It honored the Kijinsen here. It honored your Tinkinsen all throughout. A little bounce off Kijinsen here, and then another Kijinsen bounce. But all the way you're honoring these two levels. And then now it's kind of hard to tell what the market's going to do after such a big move yesterday, and we're not at a clean level with this pair as we were with the other ones. So I'd be careful on this one. I'd be patient and wait it out. Nothing to jump into right now because we're not sure here. All right. Let's go to the next one. IOTA dollar. Again, you could see this same thing as the past ones. The market loves to follow the Tinkinson Kijinsen level inside TK zone breakout. I'm not going to go back and show these same things, but you had the divergence again. You had the bearish divergence. See this level here where you're bouncing right there, and then this level was lower, which is right here, but it's not lower on the chart. So therefore you had you were inside your TK zone, and then the market closed outside your TK zone. You even had a morning star here, and morning star doesn't have to just be the 3 candles. It can be more than 3 candles within that level. This could be a classic morning star inside out trade or TK zone break trade. And then the market follows this level. Then it was such a steep takeoff that there was hardly no level to follow because we never really came back. And then now we did. Everything flattened out. Are we in a range? It looks like we're in a range right now. So if we mark the top levels, you could see top of the range, and pretty much the bottom of the range is this Kijinsen level. Look how flat it is. It came back there. We didn't really hit there. So let's mark these levels. I'm going to have to mark it based on this candle because the body is right there. That body is right there. And you can see where we bounced. So almost Kijinsen pretty much, but it's flat. So you know the market's ranging. A flat Kijinsen tells you pretty much. And if you're flat Tinkinsen and Kijinsen, man, you know that market is ranging. Do not take a trade to the upside or downside, because you definitely know you're sideways there. I mean, you could take a trade to the upside or downside if you were at the support and resistance level. Then you wouldn't really be trading Ichimoku. You're just trading the support and resistance level trades. And also with Ichimoku, you can trade ranges, but there's a different way that you trade ranges. We trade ranges based off of fluctuation level. All right, so this would be the mid of fluctuation level. We have level 1, level 2, and then level 3, and trade based off of that with our time analysis. And I'm not going to do all that here. I'll be here all day. Okay, showing you how to do that. But basically just looking at this, it looks like we're honoring this support level maybe. So bounce off of this support level. This asset's not that expensive. All right, so you could get a good opportunity here. Not a lot of risk based off of the amount that this thing costs. But is this thing stable? Because it costs so cheap. But if you can get it at this price and things work out the way that we're looking at, so we're flat here. If we can move higher and then eventually break that level, you know, we're at 3 now. We can get a 50% increase from this point. if the market violates this level, if you get a good opportunity here. These are a lot of ifs, right? But we don't know what the market's going to do. So looking at the 4 hour, let me go back to the daily, because if I show you the 4 hour, you're going to say, looking at the daily, what's your thought? Your thought is maybe we bounce off of the support level and we trade that to the upside. Now this candle has to close for us to signify that. We did signify a bounce here, but we don't want to see the next candle close lower, because then we're not honoring this level. But if this candle closes here, then you're honoring this level, and then we could see if we could get a trade to the upside. If I took Ichimoku off the chart right now, you wouldn't get confused when we go to the 4 hour time frame, because your bias is going to be long. But when I put keep Ichimoku on there and go to the 4 hour time frame, if you're trading Ichimoku, first of all, Ichimoku does not help you when it's this way. It's flat like this. Look at all these crossovers. What are you going to believe? All right. And a little small move to the downside. It's still trying to honor these levels. You see that, but I don't really use it when it's that tight of a range, when everything's that tight, Kijinsen, Tengen-sen. So I'm looking at other levels, and there's still a good opportunity here to trade this to the upside. So you still have fractal break trades here that you could trade and then still get into the trade and move up to this level. You had rejections down here and rejection levels that you could have traded into. Still didn't close above this point. Here you did, basically, maybe you closed above, a little bit above, then the market dropped back inside. But look at what we're doing right now. So if you really want to see, you're trading inside this one candle for the past 2 4 hour candles with this one candle here. If we can close back above this level, then we look for the momentum to build to the upside. If not, we're going to drop down and still try to honor this level. We could come back to the 4 hour and see if we have another setup to enter the market, a better setup than we are here. We can maybe get the market, get another trade lower at this point. All right, but still, I give it a little chance. You're not into a trade yet, so you still have time to look at that, and I'd pay attention to that. All right, so let's move off of this. So this Ripple dollar, all right, it doesn't look good to trade for me ever. I don't like this here. That's hard to trade. You're not making anything there. You can't judge that. And go all the way back. It never looked good for me. I mean, it looked good here to the downside, right? But these upside moves really were hard to catch. There were some decent little ones here. And then it made this monster move. You're not catching that unless you get lucky and catch it down here. And then to just jump in here is risky, because where do you jump in? If you jumped in up here, then it drops, you're scared, you get out. If it jumped in, you caught it up here, it dropped way down here. And then it had a good move, and now it does nothing, and then it moved up to the upside again. So it's honoring this little level that we see here. Then we have this monster drop to the downside. Are we honoring this? Is it going to come back to this point? I don't like the way the price action has been on this for quite a while, so I don't trade this. Like I tell everyone, this is like trading is like really going searching for a car, being at a car dealership. So you have a ton of car dealerships. We just looked at a bunch of them, and now we're at this car dealership, which is called Mr. Ripple Dollar, and he's selling this car for us, and we don't like the way this car looks. We don't like his other cars. We don't like everything about it. So why would we buy the car there? We could go to another car dealer, and we will. All right, so let's leave this car dealer and go to another car dealer, which is Us Dollar, and I do love this car dealer. He has some nice looking cars, so I'm going to be investing in his car maybe instead of Mr. Ripple's cars. It look terrible. All right, so when we look at this, let's go back here, guys. This is just beautiful. So looking at the daily time frame and basically where the market started, let's go to where we started really moving. All the way down here, what's it honoring, guys? It's honoring this Tengen-sen level. You got Tengen-sen bounce trades galore. I see 1, 2, 3, 4 opportunities. And then you had a TK zone trade, and basically you had an inside out trade. You had a couple opportunities there, and the market dropped to the downside. Where is it bouncing off of Tengen-sen, bouncing off of Tengen-sen? Then it violates to the upside. And then where is it? The market doesn't have strength yet because Kijinsen is flat. So where does it come back to when it's flat? Right back to Kijinsen, equilibrium, and then it goes again. It honored that Kijinsen level, guys. And then look what it's honoring now. And a strong trend, I'm telling you, the market will not come below this default Kijinsen level. It will not close below it on a strong trend. Now, weakened out a little bit, flattened here, but we didn't close below Tengen-sen. I mean, below Kijinsen. We closed below Tengen-sen here, right here. But we didn't close below the Kijinsen level. but all throughout this strong area here. Then we kind of flattened out a little bit, and then we found strength again, and we stayed above. You had trading opportunities every time we're showing you a signal at Tinkinson. Every signal at Tinkinson, you had an opportunity for a trade. And then the market now got weak with that, what you had yesterday, but now it's honoring Kijinsen level again. So an opportunity for us to move to the upside. This asset is not that expensive either. So if you could catch this for a good opportunity, you have a good chance, if this thing ever goes, to get a good opportunity. So if you could catch this opportunity and this level based off of Ichimoku, because we're honoring now the Kijinsen level. What did the market do, guys? It came down to the Kijinsen and closed there. It dropped all the way lower than it. How come it didn't close lower than it then? Why didn't it close all these assets? Why are they closing right at Kijinsen? All right, and then you could see the market starting to build strength again, trying to get, because you got buying pressure coming in here. This is equilibrium point, guys. When you're right here, there's equilibrium in the market. So when you're lower, there's not equilibrium in the market. When you're higher, there's not equilibrium in the market. When you're equal here, you have equal buyers and sellers, pretty much equilibrium. The market does not want to be an equilibrium market. The market wants to be a market full of buyers or full of sellers. All right, because then it's moving one way or the other. Here it's equilibrium, it's flattened out. You could get an opportunity to get into the market here and trade to the upside. That's what we're going to look for. Now, if we just trade based off of the daily and we're a good long-term investor, we could just take an entry at this level, put your entry there. All right, and this is what all the assets had, the rejections like this. You could think the same thing. So if you're long term, you got a little bit, and this isn't a real expensive asset. So if you put your entry there, and then maybe you start your entry here, your stop loss here, give it to there. You're long term, so you give it a chance to go. You can lose that, but if you can't afford that, you definitely put your stop loss a little bit below that Kijinsen. All right, so you still want to trade this level and then look for the market to move higher. You got to get past this point with the market, though. You got to get past this point if you're trading this level. All right, so then we want to see if we could get a better entry than this, right? Look how this market is honoring this so well. So we're going to try to go to the 4-hour time frame and get a better entry than this, right? And 4-hour could give us an entry, because our 4-hour entry is not, daily entry is not till this point. So let's remove that. And you can see if you keep your stop loss right there, where's that honoring? That's honoring the 4-hour cloud with some rejections there. This is not normal, so we're not going to put our stop loss there. This is normal, what's happening here, pretty much levels. All right, so you could put a stop loss there. We'll probably see another pullback here a little bit, because we're going to probably see the market moving a little sideways and then break. So currently no chance. You could trade this a couple different ways. You could wait for the Kumo breakout here. The Kumo breakout may not be good unless we get a drop to the downside and then come back up, because you're still underneath price with Kijinsen, with Chico span, and your future looks like it's starting to turn over. But for me, I have a different opportunity I would wait for. So I'm going to see the market drop a little bit. Look to see if we get a fractal, then we could get a fractal break out of here. But other than that, you had opportunities, you had rejections, you had indecision right here. So basically you had inside out trading right here. You had a little indecision here, a close above indecision. This is the candle that we would want to be in the trade to the upside on. All right, and then still have our stop loss here. So entry was right here. And the market basically is still at that point right there. And probably see it going to drop a little bit more, even if it comes back to your level. You don't want to have your stop loss exactly on this flat level where the market comes back to. You want to give it a little bit of room. All right, because yes, it spiked, it comes down, it could come down to that point. All right, even if you enter here, you want to give it that much, and then it could move up back to the upside. All right, but that's what we're looking at here. So let's get off of this asset, look at another asset on the daily time frame, and we're almost done here. We'll look at Dash. I won't talk about anything if there isn't anything. So this Dash, also again, on the daily time frame, US dollar. Look at what it honors, guys. Again, honors the Tinkinson and Kijinsen. No doubt about it. I got a couple trading opportunities in there. And then now the market comes down after what we had yesterday. You're not as much as you had on some of the other assets, but look at the rejection here. But look where it finally stays above. Stays above Tinkinson, really. It's still above Tinkinson and it's still showing that move. Just a lot of volatility right there. And then still, for me, this opportunity still exists. Now, we could get a better opportunity, but currently, I would be trading this point. I'd have an entry right there, right at the top here. and I'd have my stop loss. Basically, you could put your stop loss right here. Want to put it a little bit below this candle because we're trading inside this candle right here. So you want to be a little bit below that candle, not there. So we're a little bit below. So that's my entry here. And based off of Ichimoku, we're still bullish. There's nothing to stop us. Now we still have some divergence again. So when we look at that divergence, we could see the market drop. Maybe that drop yesterday was the drop. But a lot of times when you have a divergence like that, the market drops a little bit more. So this divergence is going to the downside. And that started right there. And we're right here. That's where we are with this. And we are with this. So it's still moving to the downside. That's divergence. We did have a drop. Is that enough? And then we could see the market move back. Who knows? But we do have a little bit of divergence. So this could be our top again. So we have to see if that's going to be the top, then the market's going to range. It's going to range at that point, but we still could get up to that level. Now trading from here to there was not too much of a profit. Go back. Let's look at that a little better. So trading from this level to here, you figure that's not a big profit, but some profit. And then if this is the top, this may be the top. We have to see if there's still going to be some divergence, if we could get through that level. But I love this entry here. Now if I go 4 hour, 4 hour wouldn't give me as good of an entry. I don't have that yet. The market's a little more unstable. You can't tell what you're doing from this point to this point because you got a red candle, a green candle, a red candle with a big drop, then a green candle, red, green, green. That's not good. We want to see consistency. We want to see stability, and we don't see that. So I like what the daily's showing me better with this. All right, and I pay attention to that. I'd like to see a more better entry at this point, close and honor here, and then get into the market. But we are honoring the Tinkinson at this point. All right, so let's move off of this. This Zcash we'll look at. Again, if it's a strong trend, it's staying above Tinkinson, Kijinsen. Here again, you see what it's following. It's following the Kijinsen, your Tinkinson level. It flattens out. It's not really honoring anything because it's flat. This isn't super pretty pair. It had a good move here, but now are we going to be able to catch anything? This moved back to my fractal level basically, and it's not really, I'm not looking at the your Kijinsen level. I'm looking more at the fractal level. Now we're holding support there. Let's go to the 4 hour time frame because our big entry here is way too high for us to wait because of the big drop and then this rejection. So we want to look at an entry at this point. So now we got about an opportunity. So let's see, for us guys, we're bouncing off of the bottom of this cloud here. We got a chance to make a trade to the upside. Now you're going to tell me about Ichimoku and signals and everything, but I look more at the fractals also. All right, because Ichimoku is slower. So if this market bounces here, and it's bouncing on the cloud, it bounced on the bottom. There's 4 levels of Ichimoku support and resistance: your Tinkinson, your Kijinsen, your top of your cloud, and your bottom of the cloud. And after that, there's no more support for you. So we're honoring our 3rd level of support, which is the strong level here. We're honoring it here, throughout. And then so we got a bounce here. Let's see if we can close. Probably look at an entry above the close of here if we can get a nice candle move up. Now your cloud is a little bearish. All right. But you get this close above here, you may see this thing start to roll over. You're flat here also. Chiku span, if we get here, we'll be still within price. So we may see ranging within this area. But how far could the range be? I mean, it could be above this level, could move us higher, and then eventually break out to the upside. So I do like the entry above this Tinkinson, above this Kijinsen level here. Basically above this point right here. All right. I have my entry set for that level. And I put my stop loss. To start out, I would put it right where I have this level right here. So I want to be below my Tinkinson level, which is there because Tinkinson should start moving up, and you can use that to gauge the market. All right, so if we close above this point, then you follow Tinkinson, and if Tinkinson moves higher, move your stop loss with it, but don't follow it too tight because that's where price is going to come back. And then once we get past this level here, then we can feel safer about our trade, and we can keep our stop loss at that point and let the market move, and then find where we're going to find our stop loss and our target. Now if we enter this trade here, you definitely want to get past this point here, but I would also be cautious of this level right here. This level right here. If you get into a trade, be cautious of that point, but then you also want to get past this point. Always look to your left to find your targets of support and resistance that you want to get to, and you never had anything back here, so you can't judge it. All right. Once you broke this point here, you never had anything more to your left to judge with. But now you're lower than what you were previously, so you have levels at your left that you could look at. You can see that that was a resistance level. The market came higher, a little bit resistance and support, and then now trying to break through. So now you have a little bit of record here. All right, but I do like to break above this point. Ichimoku signals are still going to be some bearish signals, but you got to pay attention in the market also, and then follow Tinkinson. Watch that crossover. If you're going to wait, maybe the market stays flat, we get a TK crossover. So this is dependent. What I'm telling you is if the market's moving base of the time, if it's going to start moving. That's what I'm telling you a lot of times. If it doesn't move and just ranges or stays where it is, then what I'm telling you isn't in effect, not going to help you at all. All right, so that's what we're looking at, this Zcash. Let's go to look at two more after this one. So this is Sentiment Dollar. And again, I'm going to show you, what does this thing honor? It honors this Tinkinson Kijinsen. It's staying above Tinkinson in a strong trend. If you follow Tinkinson and trade off of Tinkinson, you will probably make profit. I've just showed you every single pair that we looked at doing the exact same thing in a trend. In a range, it's hard. In a range, you got to have a different trading style. So I'm going to open this up because we can't see this. It's so small. Right? We're flat here. Nothing doesn't matter. But then as the market moves, it never goes below Kijinsen here. And then when it gets strong, it never goes below Tinkinson. See that? And we honor that. We came inside the TK zone. This is now, it's super big. We had two trading opportunities here, but it's too big now. We should have been looking at the morning star here, right? So I didn't come and post this quick enough for you guys to get an opportunity here. But now we also broke this upper level too. So let's see where this closes. I don't love the opportunity now because it really took off. We missed everything really, if you ask me. You have to be at levels really to trade. And if you want to just jump in here, then that's on you guys. I don't trade like that. So you're not really trading. You're just taking a guesstimate that it's going to keep going to the upside if you jump in anywhere from here. If you don't have a level where you're getting in the market, then you're just pretty much guessing that you're thinking it's going to go to the upside. And you're pretty much gambling, hoping. So go to the 4-hour time frame, see if we can get a feel on this market. And I don't like anything on the 4-hour. So I don't have a trading opportunity yet. So let's see if we get a pullback because we had a big move here. So maybe the market pulls back a little bit, gives us a chance to get into it. So if it doesn't, we can't get into it yet. Basically, inside this box here, I wouldn't really look to trade this yet. I think you could get a better opportunity than where we are now, even once we get past here. I think if we get up to here, let's see if we can get a pullback. That'll give us closer to the Kijinsen level right here, right there. And if we don't get it, we're going to violate this level. We're still going to get an opportunity to trade it, but it won't be at the $5 point. All right, it may be more at the $7, $8 point where we get another pullback. So hopefully we could see this market correct itself again and then move to the upside. So currently nothing. Just be patient on this. I always tell my traders that trees that are slow to grow bear the best fruit. If you are a slow trader, you're going to bear the best fruit. If you're a patient trader, you're going to bear the best fruit. If you're a trader that grows fast, you die fast. Okay. You're a trader that jumps on things quick, you die quick. All right, you're not going to bear good fruit. You're going to lose your account quick. You're going to be losing big money quick. This game takes patience and understanding. And then if you want to say luck, well then some luck too. All right, let's look at this. We got one more pair to look at this after this. Bch US Dollar, okay. Let's go to daily time frame, feel what this thing is doing. Same exact thing, guys. And I talked about this, had a little webinar yesterday, talked about this already. It's honoring this level again. Here it was flat, the market's doing nothing. Then we had a nice little move and we're flat again. Again, I don't love the overall price action here, but you can see what does it honor? These levels I've been telling you. It keeps honoring those levels. It keeps giving you chances at those levels. If you just be patient and wait, you'll get chances at those levels. Here it was sideways all the way through here. We have to trade this as a range. You could have, but we looked at this now, the market moving higher. Now it rejected right on Kijinsen again. It dropped a little bit lower, but it's honoring that level pretty much. All right. And then you could see where we're trying to close above. I already would tell people that based on this, you could enter right here. You can enter right there, all right, because you had a rejection and there's a lot of buying pressure coming in here. So once it's forced up that high, you expect that market to continue. So you enter right here, all right, stop loss a little bit below this box, somewhere in that area. But you expect these two candles to hold for you, so you put your stop loss a little below. You could even start out down here, but because this market is so volatile, but it doesn't look like it's super volatile, except you see a couple times stuff happened. See that? So you saw this big volatility here, then some here, then the market dropped, then you had big volatility here. Should still see the market continue, because at this point with the big rejection here, you expected the market to drop to the downside. With the big rejection here, you kind of expect the market to move to the upside. All right, rejection here, you expect the market to move to the upside. Rejection, this is more indecision because you had a big rejection though, but that's more indecision. Then a rejection here, you kind of thought it might move to the downside. Rejection here, little pullback, that's all that would be, a rejection pullback. And then you expected the market to, wherever you see those rejections like that, and this is the biggest one of the biggest ones, and then this one, and then you had a rejection back here, big one. But big ones like this you expect because you got a lot of selling pressure here. This thing sold off and dropped. This thing buying, it did sell off here and sold big off strong, but then a lot of buyers came back in. So my entry should be right at this point right now where we are, basically. And then, guys, let's go to 4 hours, see if we could get a better opportunity. 4 hour, no better opportunity. Still inside the box here. So I still like what I see on the daily. I just like the entry where we are, probably at 3134.1, somewhere in there for entry, pretty much where we are right now. Stop loss pretty much down here, maybe at 2290, and we need to get past that level for sure. And then our target overall would be, if we go 1 to 1, I'm going to go from the small level. Let's go from here first. This is Ichimoku observation theory levels. So our target will be here. And you can see I put Ichimoku values in here. And that's why I'm getting these levels. Now, if I use this long wick, that's where, and I'm going to use it because it's where the market dropped. Okay, but we started here. So 1, 2, 3, 4 should be up here. So you're shooting for N level, which would be your target. First target is going to be 45, 42.1. And then you may go to 51, 57.9, and then 62, 44.6. You first also want to get past 43, 38.7, which is going to be NT value, which is going to be pretty much close to N. I don't know why we have NT and N value. They're pretty much close, but that's when you fail to get to N level. You have NT value, but they're so close. I just always look at the 1-to-1 value. That's basically what an N value is. So, but you need to get past this little point, which pretty much is close to our target anyway. All right, so this is a good entry for me. All right, guys, so that's Bch US dollar. Let's move on to the very last one. All right, and on the daily time frame, we're looking at NEO dollar. Again, what does it follow? It's not following anything here because it's not trending. It's just junk. Ichimoku doesn't help you much here either. And this asset, not that old, so nothing to really go by. Starting this year, but still it's a new asset. What's it still following? And then now I don't really have anything I'm looking to trade. I mean, still do have that rejection, but see, the rejection's not sitting on any level. We're inside our TK zone. So with that rejection, I could still probably see the market drop to a support level. But we did hit one thing. We hit one of our fractal levels, and we are honoring that level. So you break one, you return to one, and you trade one. So I teach the fractal trades throughout. That's one of the bigger trades, and I teach that throughout the course, my courses, and that's where we're sitting right now with this thing. Let's go to 4-hour time frame. We're honoring that level precisely right now. And I don't love what the 4 hours offering right now, especially Ichimoku wise. If I take Ichimoku off the chart, I have a good trade entry setting up. I don't have anything yet, but I'll base it. If I took Ichimoku off the chart, you could just look and see that you're inside this one candle. Basically, you trade inside this candle, then you broke out, but you're inside this one candle for the past 3 4-hour candles. So past 12 hours, you're inside this box. Wait to see if you could get a break outside of that box, and then that's where I would trade. All right, but you're pretty much bouncing on a pretty nice level. You're bouncing on a fractal level where you could trade off of that fractal level trade, and I pretty much show that and teach that trade. Very popular trade. All right, guys, but that's going to be it. All right, so I'm going to end this. I'm going to show you my website real quick and let you see. If you want to think about becoming a member, I have a lifetime offer right now. If you become a lifetime member between now and the end of the year, then you can be a lifetime member, because this offer is only good till the end of the year. I'm closing it out at the end of the year. I'll never have a lifetime membership again for that price, because currently the $250 gets you a lifetime membership at my site, which has courses, which has webinars, daily webinars talking about Forex, starting to do options, Forex, cryptocurrencies. We have webinars, we have a chat room, we have a forum. So those things are pretty good, and the courses are, I've been getting pretty good reviews about the courses. Everyone pretty much loves them. So let me show you real quick, and then I'll let you get out of here. So here we are at my site. This is my site. I pretty much changed it to the blog style, but here's the things that are here. And I'll post this video here too. It'll be right here next. And then you have the forum. You have our chat room. This is the blog here, right here. And then you have my lifetime membership, and you have courses. So inside the members area, we have market analysis videos, cryptocurrency market analysis videos, trade setups, educational videos. And if you like what you see here, you can post a testimonial and you can read about it right here. This is where members post testimonials about everything, and they tell you how they think about my testimonials right there. So you can come to my site, click that, and see what members are saying. If you want to see the courses, first of all, here's the courses right here. You click the courses, and if you're a member, if you become a lifetime member, you have lifetime access to all these courses, new courses or old courses. Anything new I do, you have access to as a lifetime member. You'll have access to new courses that I post, any new videos, anything, forever. But that ends at the end of this month. So you got the high probability price action video course, you got Ichimoku advanced techniques course, you got Ichimoku online video course. Those are the 3 main courses, and this is the main course. You want to start with that, then go to this, and then go to this one. All right, and then this was a weekly active session we had. You could look at that. And then it's a 7-day market forecast. I don't put those in there anymore. All right, and so I'm gonna have some free, also have some free courses that I'm gonna post. It just takes a while to do all this stuff. All right, but if you want to become a lifetime member, click there, and it'll give you that opportunity to become a lifetime member. And you can see this lasts until 2018. At the end of December, it's over with. But it's a $250 membership right now, and it gets you everything. So guys, I hope this helped you out. I don't care if you become a member or not. I just put the videos out not for you to become a member, but just to help you out and show you some of the things I trade. And if you're more interested, then you could become a member. If you're not more interested, if you stick with the things I'm showing you here on YouTube or my site, just stick with these things. You could still be profitable if you follow the pattern and have patience and be consistent in what you're doing. A lot of traders think that the system is the holy grail. They're looking for that holy grail system. I want to trade that. I want to trade this. I want to trade that. It doesn't matter what you trade. If you don't have the mentality to be a trader, if you don't have the patience and the discipline, it doesn't matter, because most things that you trade are going to have it's going to have rules that you have to follow to enter a trade. So if you're breaking those rules, then what good is it? If you're not patient enough to wait, if you're trying to beat the market and jump in before time, and then the market goes against you, then what good is it? You don't have the discipline. You don't have the patience. It doesn't matter what system you use. You are the holy grail, not the system. So remember that, all right? So be a tree that's slow to grow, and you will bear the best fruit. Until next time, guys, have a great one. God bless. So long.